Have you ever found yourself juggling personal and business transactions on Venmo, only to be hit with a surprise $1,099 at tax time? Or perhaps you're just starting out, taking payments for your side hustle on Venmo, and you're wondering what the heck a $1,099 even is and if it applies to you. You're not alone. In today's digital economy, where platforms like Venmo make it incredibly easy to send and receive money, understanding the tax implications, especially for business payments, has become more crucial than ever. Venmo started as a simple, peer-to-peer payment app, perfect for splitting dinner bills or sending your friend rent money. But as its popularity exploded, so did its use for business transactions. Think about it. A small business owner selling handmade crafts at a market, a freelance graphic designer receiving payment for a logo, a dog walker collecting their fees, or even someone selling items occasionally online, many of them found Venmo to be a convenient tool. And for a long time, the IRS reporting thresholds were quite high, meaning most casual business users flew under the radar when it came to receiving official tax forms directly from Venmo. However, things have changed, and they continue to evolve. The IRS has been increasingly focused on capturing income from the gig economy and digital platforms. This shift has brought the Form 1099-K into the spotlight for many Venmo users. It's no longer just about those massive e-commerce operations. Even smaller-scale sellers and service providers need to pay attention. The purpose of this video is to demystify business payments on Venmo and the dreaded 1099-K. We'll break down what a 1099-K is, who receives one, the current and upcoming reporting thresholds, and what you need to do if you get one. More importantly, we'll discuss how to proactively manage your Venmo transactions to simplify your tax life and avoid any unwelcome surprises. Whether you're a seasoned freelancer, a budding entrepreneur, or just someone who uses Venmo for a little bit of everything, this information is vital for staying compliant and stress-free during tax season. So, let's dive in and unravel the complexities of Venmo business payments and the 1099-K. Understanding the 1099-K, what is it, really? First things first, what exactly is a Form 1099-K? It stands for Payment Card and Third-Party Network Transactions. In simple terms, it's an informational tax document issued by payment processors like Venmo, PayPal, Stripe, and even credit card companies, to report the gross amount of payments you received through their network for goods and services. Think of it as a summary of your sales facilitated by these platforms. The IRS uses these forms to ensure that individuals and businesses accurately report their income. It's crucial to understand that a 1099-K reports the gross amount of payments. This means it doesn't account for refunds you issued, processing fees you paid, or any other business expenses. That's a key distinction we'll come back to. Historically, the threshold for receiving a 1099-K was quite high, over $20,000 in gross payments and more than 200 transactions in a calendar year. This meant that many smaller sellers and freelancers didn't receive one. However, the IRS has been working to lower this threshold. For the 2024 tax year, which you'll be filing in early 2025, the federal reporting threshold is $5,000. This is a transitional threshold. The plan is for it to drop further to $2,500 for the 2025 tax year, and eventually to $600 for 2026 and subsequent years. It's also important to note that some states have their own lower reporting thresholds. For instance, states like Maryland, Massachusetts, Vermont, and Virginia have a $600 threshold, regardless of the number of transactions. Illinois has a threshold of over $1,000 and 4+ separate transactions. So, even if you don't meet the federal threshold, you might still receive a 1099-K if you live in one of these states and exceed their specific limits. If you meet the applicable threshold, Venmo is required to send you a 1099-K by January 31st of the following year. They typically make these available electronically within your Venmo account. If you don't receive one but believe you should have, or if the information seems incorrect, you should contact Venmo directly. Personal payments versus business payments, the crucial distinction. This is perhaps the most important concept to grasp when it comes to Venmo and taxes. Not all money received on Venmo is considered taxable income, and not all payments trigger a $1,099K. The $1,099K specifically applies to payments for goods and services. What does this mean in practice? Personal payments. If your friend Venmos you for your share of a dinner bill, or you receive money as a gift, or you split rent with roommates, these are generally considered personal payments. They are not payments for goods or services and are therefore not taxable income. Venmo has a feature that allows users to tag payments as friends and family or goods and services. While this helps, it's not foolproof, and ultimately, the nature of the transaction is what matters for tax purposes. Business payments. If you receive money for selling a product, providing a service, like dog walking, graphic design, tutoring, renting out property, or even selling items as a hobby, these are considered payments for goods and services. This is the income the IRS is interested in, and these are the types of transactions that count towards the $1,099K threshold. The key takeaway here is that even if you don't receive a $1,099K, you are still legally obligated to report all taxable income, regardless of the amount or how you received it. The $1,099K is simply a tool the IRS uses to help track these payments. If you earned $500 selling crafts on Venmo and didn't hit the threshold for a $1,099K, that $500 is still taxable income that needs to be reported on your tax return. Venmo Business Profiles, your best bet for clarity. Given the increasing scrutiny on digital payments, if you're regularly using Venmo to receive money for goods and services, setting up a Venmo business profile is highly recommended. It's not just about compliance, it's about making your life easier. What is a Venmo business profile? It's a separate profile linked to your personal Venmo account, specifically designed for accepting business payments. It's built for individuals, sole proprietors, associations/clubs, and registered businesses. Here's why it's a game changer. Clear separation. The biggest advantage is that it clearly separates your personal transactions from your business transactions. This makes record keeping significantly simpler. When tax time rolls around, you won't have to painstakingly sift through all your Venmo activity to distinguish personal reimbursements from actual business income. Automatic $1,099K issuance. If you meet the reporting thresholds, Venmo will automatically issue a $1,099K specifically for your business profile's activity. This ensures you receive the correct tax documentation for your business earnings. Professional appearance. A business profile allows you to include a business name, description, website links, social media handles, and even a photo gallery. This gives your business a more professional look and feel to your customers. With that said, thanks for watching, and until next time.